Hi guys, that's Javaco here after a long break. I am resuming supply and demand analysis. So maybe first let's get started from the Aussie New Zealand. As this pair made a quite nice decent bounce of the weekly levels. So let's get started and see from the what the charts show us. So now we have triple screen. Let's start from the monthly. Monthly doesn't shows us any. There is no any supply or demand. I mean the valid one for the moment. So based on this chart, we can clearly see that market is consolidated because neither opposite supply has been removed or neither opposite demand is removed. On the weekly, we have this quite a nice supply zone over there, and we can also highlight the last demand, which is over there. Now, so that's from the weekly perspective. As we can see, price first reached this oversupply, nicely reacted. If we go back on the daily, we can see that we don't have actually clear supply over there, but we have kind of multiple touch level. That's like a very minor supply over there. Then we have, let's say, another swing low point here and kind of reaction here before. So the ideal things would be just to enter here because that's the last supply before breakout. But as you can see for a moment, price never actually reached that level here, which doesn't mean that if that price will bounce up or later on, it won't bounce off this level because that's still valid. But incidentally, just price just stopped over there and bounce it off. All right. So that was kind of a configuration for short. If we want to go long for a moment, now we can see that actually this when price left that demand, it doesn't remove actually anything from this side, but it remove this supply over there. So and then we got the immediate retracement, and now on this daily chart we can see that we have kind of cluster of highs. So that's the last high before price broke up and retested. Also, as we can see, that price nicely bounce of it just over there, and hit our first target, which was, I would say, that was very first one because that was kind of reaction over there, this little wick, and these clusters of bar lows over there, that was obvious target as well for these longs. As you can see, I don't identify supply demand zones based on the open and close of the bar, because like after years of practice, I just discovered that it doesn't tell me like anything. For me, most important is those little wicks over there, because there you can see that and this area was if you look on from the market profile, that's kind of a low volume area over there. That price was just reacting and came back very quick. So that's the place when I'm always considering when placing the order. But just when I want to see after this freshly zone created, I just want on the next bar I wanna have clear breakout, and I don't want to see any immediate retest after break. You know what I mean? Because of course it may work, but every single immediate retest may cause that we can get a deeper and drawdown, or eventually if that level will not work for a moment. Of course, if you want to go short, if you're gonna go long here, the stop will go just above this little swing bar low over there. Maybe we can extend that for like 10-20% of the whole zone, just in case, because price sometimes used to go deeper in that level and make swing failure. I mean, it wants retest this swing low there and just close it above. Yeah, so that long here have the double confluence, because there was a weekly demand as well. If of course we can also draw the trend line. Now, so as you can see, price just perfectly reacted to this trend line on the daily and on the weekly. Thank you very much for your attention.